For more reaction to the House vote on President Trump's mega bill, let's bring in Dan Clifton, head of policy research for Strategas Securities. Dan, great to have you with us. Probably a long night for you as well. Are you surprised at where we are right now? And sort of give us a bigger picture view of this. How important is this in terms of the passage of this bill ultimately to the Trump agenda for the remaining of his term, which is quite a long time?
Well, first, thank you for having me on this morning. We're going to get a tax bill by July 4th. That's what the president wanted, and I think it's critical to his agenda, Melissa. What you see here is a president who was very aggressive on tariffs at the beginning of his administration, and this tax bill will essentially sterilize the negative economic impact of some of those tariffs. In particular, the business tax cuts, being able to expense you're building a factory, being able to expense capital goods order, being able to expense R&D equipment. These are very significant changes, and they're permanently locked into the tax code now. So the only way to change it is to actually vote on legislation to remove that. That's much harder to do. On the consumer side, you're going to see pretty significant consumer tax refunds coming out in February, March, and April of next year. This is from the child credit, the standard deduction, the increased SALT deduction. So you're going to get two bites at the apple, one on the business investment side, one on the tax side. And I think it couldn't have come any sooner here, largely because, you're starting to see the employment market begin to slow down from some of those tariffs. And so this sterilization will be in place. I want to make two other key points. There will be a lot of talk about the deficit. In isolation, the deficit increases. The tariffs mostly offset that. And I think that will be reflected in the next congressional budget office outlook. But more importantly, as soon as the president signs this bill, which will probably be tomorrow or the next day, the debt ceiling will get raised. And that means that Treasury is going to have to go out not only with the debt issuance that they got to do on a forward basis, but all the debt issuance that hasn't happened this year because we've been in this debt ceiling suspension for a while. And so there will be a lot of focus on how Treasury Secretary Bessent is going to fund the U.S. government. We expect him to do it much more on the short end of the curve with T-bills. And I think that's going to be a big focus for investors. And then once that clears out, we go right to financial deregulation. And you still have the July 9 tariff date coming up. So a lot of policy still in the pipeline here. And I think that this is the key central fiscal policy to sterilize any of the negative impact from those tariffs.
I think it's interesting that you use the word sterilization in terms of the impact of the tariffs. Does that embolden him to have a more prolonged tariff trade war with countries around the world?
It's an excellent question. If you look at the Vietnam deal that was announced yesterday, tariffs are going up from where they are. Now, they're not going up a lot. It's like maybe a $15 billion tariff increase. But now you have the cushion to be able to get those deals done and maybe have a slightly higher tariff revenue number that I think really Treasury Secretary Bessent needs a lot of credit here. He slowed down the tariffs in mid-April. He reduced the size of them. He cut the deal with China. But most importantly, he spread them out by getting that delay to July 9th, and that allowed the fiscal policy to come in. So our expectation is not that tariffs are going lower, but tariffs are going to go slightly higher here, and that's a very key reason
so
why
Dan,
the tax bill is so important.
One of the big questions I've asked it almost repeatedly of almost every guest that we've had that's based in Washington as it relates to tariffs with China, just because it's the question I got another one, by the way, somebody texting me this morning about it. Do you think it's 20%? Do you think it's going to be 30%? What kind of delta are we really talking about here as it relates to China, just given the volume of merchandise? And of course, it depends what kind of merchandise we're talking about, but just on average that may come or not come into the United States.
Great question, Andrew. So we had about 145% tariff on China in mid-April. Today, that number is about 35 plus the 20 that Trump had previously from his first term. So you're looking at about a 55% rate on tariff. That's not the end of the story, though. If you look at the Vietnam deal that was cut yesterday, goods that come from China into Vietnam are going to face a higher tariff rate. And what the Trump administration is trying to do is kind of clamp down on these transshipments that are happening and make it more expensive to do. And that's why I think what's very interesting about Trump's trade policy is that Mexico and Canada are probably going to be the biggest winners of this. And you've been just seeing these kind of Mexico stocks really ripping over the last couple of days as you start to see some of these trade policies really clamp down on it. It's just going to be more expensive to bring in Chinese goods from Asian countries than it would be.
So
from
So what do you think the delta is going to be there between coming in from China versus coming in from Canada or Mexico?
Yep, absolutely. So, I mean, you have no 10% tariff on Mexico or Canada, right? And you got 10% on every country in the world. And it's going to be more expensive to reroute those Chinese goods into Asia countries and back into the United States. And so what you're going to see is that the supply chain is going to come closer to home. This is what Trump's trying to do.
Right.
And I think the Vietnam deal was the first one. We expect over the next couple of days that we're going to see an India deal that's shaped very similar to that.